Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally lower Friday morning after stocks rallied to a fresh record on Thursday. The Dow closed above 46,000 for the first time ever, while the S&P 500 climbed by over 0.8%. Thursday's moves came after a pair of economic data points further solidified traders' expectations of a rate cut when the Fed meets next week. First, the August Consumer Price Index revealed prices rose by 2.9% year over year. That's in line with expectations. Then signs of a cooling labor market persisted, with initial weekly jobless claims reaching 263,000. That's the most since October of 2021. Investors will get a closer look at the state of the consumer this morning when the University of Michigan releases its preliminary September consumer sentiment index reading. Here at the NYSE, IPO fever continues as Via Transportation rings the opening bell and begins trading later today. Via, which works with cities and governments to transform public transit with technology, priced its IPO above range at $46 per share, valuing the firm at approximately $3.7 billion. Here's what's on tap this hour. We'll have coverage of Via's IPO celebration throughout the hour, including interviews with two of the firm's C-suite executives about how Via is transforming public transportation systems into smart, data-driven, and efficient networks. Meanwhile, a new survey from Icertis says more than 80% of C-suite leaders are ready to bring AI to the negotiation table. Its CEO tells us how its latest product will help do just that. And another NYSE-listed company, CVS, is investing $20 billion over the next decade to elevate the patient experience. You won't want to miss what Talik Mandati, CVS's EVP of Ventures and its Chief Experience and Technology Officer, had to say. But we begin with the markets, as we always do here on NYSE Live. Joining me now is Larry Werther. He is the chief U.S. economist for Daiwa Capital Markets America. Welcome to the show.
Ashley, I'm pleased to be here. Thanks for having me.
Awesome. So next Wednesday, we have this highly anticipated September Fed meeting. What do you think is going to happen there?
Sure. I'm in line with the broad consensus that the Federal Open Market Committee is going to cut rates by 25 basis points. We saw no surprises in the inflation data, and I think the labor market has softened up enough that action is likely from the committee.
All right, and the Fed is also going to meet on, later on in the year. What do you expect to happen moving forward?
Sure. Given the softening that we've seen in the labor market, I certainly think that the views of officials have evolved. My expectation currently is that they'll cut sequentially into year end. That would be at the meeting next week, and then in late October, and finally at the end of the year. They'd like to get closer to neutral, ideally by year end.
And how do rate cuts affect the economy, investors?
Sure. Well, rate cuts, the federal funds rate, as you know, is not the mechanism necessarily of boosting the economy, but that rate will diffuse through the economy. It'll lower borrowing costs for consumers and businesses. And I think also the symbolic or the signal value of it to businesses that the central bank has their back will give a boost as well. So lower borrowing costs and hurdle rates for new projects, and also a shift in stance where businesses can be more confident going forward that it'll be easier to finance projects.
And there are definitely people who have different opinions on it. What are some of the pros and the cons of a rate cut, in your opinion?
Sure. So certainly first the cons. Obviously, we're not back to 2% inflation. There's still the tariff issue that's hanging over the market. My view is that tariffs won't give as much of a boost to inflation as I think people were scared about earlier, but it's still very much a wait-and-see process. And certainly with tariffs now getting kicked to the courts as well, probably the Supreme Court, there's still a lot of uncertainty there, which I would add markets and businesses also don't like. On the plus side, though, I think it will provide a tailwind to the labor market into year-end. Firms, as the Fed starts to ease, will be more confident perhaps in adding new positions again. So you should get a little bit of a thaw there, which should have also knock-on effects through the broader economy.
And given recent inflation data that's come out, these jobs numbers, we were at 263,000 jobless claims. What do you think is in store for the rest of the year in terms of economic growth?
Sure. I would say first, I don't think we're necessarily at the precipice of a recession, but below potential growth is in the offing. Right now, I have penciled in GDP growth in the area of 1.3%. I think you've seen enough canceled projects by businesses, enough slowing in the labor market to suggest that aggregate demand has eased. So I would say a one handle there, but still, again, I'm not on recession watch necessarily yet.
All right, and I understand that you believe that tariff-related pressure can peak in Q4. Why is that, and how do you think it can affect inflation?
Sure. My view here, which aligns with views expressed, for instance, by Chris Waller at the Fed, is that tariffs are oftentimes responsible for a one-time price level increase. And I think that, in concert with softening demand in the economy, suggests that firms will be willing to eat some of the higher costs that they're now seeing. So you'll probably get maybe 40 to 50% of the costs ultimately passed through to the consumer. And then once firms internalize these, remember, inflation is a rate of change. And once you achieve that new base level, 15 or 18%, whatever the prevailing tariff rate is, then you have other things to focus on with inflation. So again, I think it'll work through on a one-time basis. And my expectation is that policy will be set by the end of the year, and most of the price changes will pass through by then.
I know you mentioned firms might be absorbing some of the cost of the tariffs. Do you think it's going to be passed on to the consumer?
As I said, I think some will. I think we're seeing a lot of stories right now in the financial press where firms like your Walmarts, your Targets, your big box retailers want to maintain foot traffic in an environment where we have seen some slowing in demand. So I think ultimately there will be some pass-through. We've seen indications by your CFOs and your CEOs that some will be passed through. But I would also add that I think firms will absorb some of it in margins, which recall are elevated coming out of COVID. So there'll be a little bit of give and take on the parts of firms to maintain foot traffic.
What should investors know when it comes to fixed income, and what do you think we'll see in this area before the end of the year?
So fixed income, I think there are two competing concerns right now, specifically with the back end of the curve. In one sense, you have profligate spending by the federal government. You have debt likely to hit 170% of GDP by 2050. So all of these things are negative for the back end of the curve. That being said, though, with signals we're seeing from the Fed and with, I think, a near-term focus on risks, certainly with the 10 years back to 4%, I think right now you always have to watch for further curve steepening, but thinking 2s, 10s in the vicinity of 50 basis points is a good ballpark. And for me, I think the prevailing level of rates will be at least lower for a time as investors pick through, the prospect of further Fed cuts into next year.
All right, and we have like 30 seconds left. Any other economic storylines that are maybe under the radar that you have your eye on?
I would say very much the resilience of the consumer or the lack thereof. The consumer is the backbone of the U.S. economy. We've seen some warning signs like a spike in delinquencies with respect to student loans. And so I think they're really the story to watch, and we'll get some insight with that with the consumer sentiment numbers coming out a little later today. So I'll be watching those closely.
Thank you so much, Larry Werther, Chief U.S. Economist for Daiwa Capital Markets America. Thank you so much for joining us and for your expertise.
Ashley, thank you again as well.
Coming up, software company Icertis is helping clients negotiate and manage contracts with the help of artificial intelligence. Find out how when we come back.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing, and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan. Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies. And we're listening to our customers every day about what you need.
Welcome back to NYSE Live. Icertis is bringing AI to the negotiating table. The company helps clients plan and manage contracts, and they're making a move into agentic with a new product called Vera. Joining me now to share more is Icertis' CEO, Anand Subaraman. Anand, welcome to NYSE Live.
Thank you, Ashley, and lovely to be here.
Of course, so let's start with the basics. What service is Icertis providing, and who are your customers?
Sure. So if you take a look, today almost all transactions in the world are codified through a contract. Every dollar spent by an organization or coming in is through a contract. Icertis is in the business of digitizing all of these contracts at scale using AI and agentic automation. We have probably over close to 40% of the Fortune 100 on our platform, including some of McDonald's, Bristol-Myers Squibb, Johnson & Johnson, all of which are NYSE traded companies.
Yeah, so you recently launched a new product called Vera, which is essentially 3 agentic agents. Can you tell me what they're going to be able to do?
Absolutely. If you take a look, Vera is all about trust. Today's AI world, trust is at a premium, and enterprises really want to see trust whenever you're trying to make agents work for them. We have all the insight of millions of business relationships over the years. And so we are able to build a much better trusted AI platform, which is Vera. Vera helps automate at scale and deliver agents to really focus on how companies can derive value from their enterprise contracts, how they can save revenue, how they can save cost, and as well as how they can reduce risk. That's all about Vera.
Okay, so these agentic agents, do you have any use cases? If I was an enterprise user, if I was working at Johnson & Johnson, for example, and I was utilizing this technology, what are these agents doing for the customers?
Absolutely. So if you take a look, any large company would have thousands of contracts, for example, in supplier automation. So if you take a look, a company like Johnson & Johnson would run through agents which would identify every source of saving from all our suppliers. You look at tariff conditions. They would actually identify all the risks in your contract and say, what's your exposure to suppliers in China, for example, where you need to really change your supplier base because of global geopolitical strategies. All of this is possible with our agents. You take a large customer, for example, we have Accenture, who signed up to be one of our marquee customers for Vera. They look at all their contracts and say, what's the revenue gain opportunity out there? What new clients can they go after? What new services can they sell to their clients? And Vera helps traverse through all the contracts and get information insight on that. So huge opportunities that comes up from Vera.
All right, we're just going to take a quick moment away. I just want to welcome the more than 1,000 VIA employees who have joined our broadcast. We are so excited to walk you through the bell ringing. We're going to have some interviews with your C-suite executives at the end of the show. Welcome, welcome, welcome. And I will turn the interview back to you, Anand. Apologies. So you recently released a survey of over 1,000 C-suite executives, right? And 83% of them said they are ready to embrace agentic solutions. What do you think that means for AI moving forward?
Almost all C-suite executives that I speak to, as well as in our survey, basically believe that agentic AI automation is here to stay. And we see over 50 to 60% of them saying, we can actually negotiate contracts. They can negotiate every business relationship between suppliers and customers through agents. A profound change in which how business is done. But at the same time, they say it's important to have trust. What are the guardrails of these agents? Humans, you have trust in humans. How do I build trust with the agents itself? And that's very critical to us with Vera. Vera is all about trust. We have understood how businesses work for a decade. We've understood all about contracts. We bring that force to bear with AI to really say this is a trusted way to enforce agentic automation to help our C-suite leaders and clients make decisions.
What is next for Icertis?
We have taken all the business relationships of all our clients through our contracts. How do we expose them to millions more within the same organization they work with? How do they develop more serious business relationship with their customers and suppliers? That's really very important for us with Vera. How do we take the 40% of our Fortune 100, take the next set of customers and deliver a great service to them? How do we change the SaaS model to a service as a software, which is really where AI and agentic automation is leading towards? That's really what we want to get to with Vera at Icertis.
Anand Subaraman, thank you so much, CEO of Icertis. Thank you for joining us.
Thank you so much, Ashley. Thank you for having me over.
Coming up, CVS Health is investing $20 billion into its latest initiative to boost the customer experience. We'll tell you more about it next.
Launch team is ready to proceed at this time.
You have permission to launch.
FPU is go. LRD is go. SRO is go. CDR is go.
Ignition sequence start. Engines on.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Liftoff. We have liftoff.
Hosting this event is a tremendous honor for us at the New York Stock Exchange. We like to remind people that our nation and our markets grew up side by side.
Lynn, thanks to you and the Stock Exchange for permitting us all to gather. It's so good to be back here.
But tonight, it's not just another elegant dinner among distinguished peers. It is a turning point in the history of the Medal of Honor.
We're honored to be in the presence of nearly 20 of our nation's 61 living Medal of Honor recipients.
This evening marks a renewal, a reaffirmation of our mission, and a call to action for all of us who are entrusted with carrying this legacy forward.
Because of people like you, we are able to do what we do every day, to turn that dream into a reality.
back to NYSE Live. CVS Health says it's investing $20 billion over the next decade to elevate the customer experience. Kristen Scholler spoke with Talik Mandati, the company's EVP of Ventures and Chief Experience and Technology Officer, more about this initiative. Check it out.
Experience is one part of it, Kristen. I think we are imagining the entire healthcare, changing the experience from being sporadic and completely siloed to an integrated experience that's customer focused, expanding the access to healthcare to patients and consumers, giving full transparency to the cost of healthcare and the ability to manage the cost, and then making sure they get the right outcomes by picking the right doctor, right facility, and getting the advice that they need. So all those things are part of how we are transforming healthcare.
What does the data show about the link between customer experience and health outcome?
Good experience, good healthcare experience leads to people engaging in their health more. And engaging in their health more leads to better trust and behaviors. And it's clear from the data, when people engage in their health sooner than later, more frequently than not, they have much better outcomes, much better longevity and better health. So data is very clear about that. It all starts with the experience.
CVS Health has committed $20 billion over the next decade to improve the patient experience. How is it going to deploy that money?
When we looked at customer experience or patient experience, clearly how the patient engages with CVS Health and how they navigate the healthcare ecosystem, that's really important. Second, equally important, is eliminating the friction between the providers and the rest of the healthcare ecosystem. So the providers can provide better experience to the consumer or the patient. And third, as a company, just operating more efficiently and more agile. All those three things are important. And our $20 billion is going towards the experience, the eliminating provider friction, and being a more lean and agile company. We invest that money, or we intend to invest that money in two different ways. One is developing capabilities that go against the three I talked about. Also investing in the digital health ecosystem. So we have CVS Health Ventures, and we intend to invest a lot of money every year into the ventures ecosystem as well.
I want to hear more, Talak, about how AI and digital innovation fit into the strategy at CVS Health.
Healthcare as an industry, I'm a relative outsider. I've been here in healthcare for 3 years. Healthcare as an industry has very successfully and consistently resisted change and transformation and technology or the past many decades. And so healthcare as an industry is well behind other industries like financial or entertainment in adopting technology and getting better because of it. AI, I think, is a truly once-in-a-generation phenomenon for healthcare. It reminds me of, third world was not well connected when it is wired telecom, right? Copper was too expensive for the third world. When cellular came on into vogue, the third world really leaped forward the developed world in being connected. I think that's what AI is going to do to healthcare. Healthcare is going to leapfrog the other industries in getting transformed with technology, and AI is going to do that. I think AI is going to change the access to healthcare paradigm by expanding access to people and allowing folks like pharmacists to operate at the top of their license. AI is going to allow cost management and transparency, AI is going to make the experience a lot more coordinated. So we are really bullish about the impact of AI.
2025 this year has brought a lot of change. How is CVS Health working with the White House to reach its goals?
We were very excited to pledge to be a part of the pledge to CMS on a variety of things: app, kill the clipboard, interoperability, payer commitments to reduce provider friction. We were happy to pledge to all of those with the CMS. And interestingly, we didn't have to change any of our roadmaps because that work was already part of what we were planning on doing. So we are in a good shape to achieve those pledges. And I want to say, look, healthcare is an industry where the administration plays an incredibly important role, and the partnership between private and public sector is incredibly important, and we are glad to be part of that.
What are the ways that consumers can digitally engage with CVS Health now for better access?
We think of experience as omni-channel. So whether you go to the store, whether you pick up the phone and call, whether you access digitally, the experience should be the same. The experience should be completely integrated. The experience should be proactive. And the experience should be actually enjoyable, which hasn't been the case in healthcare in a long time. But it all starts with digital. So our app, as an example, by the end of this year, there will be complete integration between Caremark, which is the pharmacy benefits provider, Aetna, medical insurance provider, CVS Pharmacy, which is a retail, specialty, and mail order pharmacy, and our Oak Street and Minute Clinic clinical aspects. All of them would be completely integrated in the app. So the consumer, when they open the app is for them. It doesn't reflect the different stakeholders of healthcare. It reflects the needs, the preferences of the consumer. And consumer at that point, using AI-based search, just asks, I'm getting hip surgery. I want it to be scheduled. And everything to do with that will be scheduled. So we are really bullish about that integrated experience that's consumer-centric and that's in civilian language. It's natural language. We are very excited about that.
Well, the fall is upon us, Tilak. What is CVS Health's message to keep patients healthy this season?
The first macro thing I would say is engage with your health and take advantage of the app, take advantage of the store channels, talk to the pharmacist, engage with your own health. That's very important. And then I cannot emphasize, obviously, immunizations as we go into the winter season are important. And CVS Pharmacy Store is a great place to get your immunizations.
Thanks to Lach Mandati and Kristen Scholler for that interview. In just a moment, Via Transportation will ring the opening bell to celebrate its IPO on the New York Stock Exchange. Via says it is on a mission to create public transportation systems that provide greater access to jobs, healthcare, and education. Excitement is building on the floor. The executives just entered the Bell podium. Let's watch them ring the bell.
history of capital markets, the foundation of the dollar economy. We wanted to be here. This is a successful IPO. We have so much ahead of us. This doesn't happen without the extraordinary efforts of the people here. With that, let's go!
So today is a new chapter. Today is a new age.
Circle is building the foundation of our new economic system. We deeply believe we can raise global economic prosperity. We can change the outcomes of people's lives. I am so thrilled for this next chapter to begin today with all of you in this historic building.
"40 years, 40 million meals served across the city. That's no small feat. Your organization is so important, and we're so thankful that you're a part of New York City."
I am so excited to be stepping in this role, mostly because of all of you, the 150 people that are back at our office actually working this morning, and the 23,000+ volunteers that come in and out of that building every year, and of course, the thousands and thousands of clients that we help every single day because of all of your hard work.
Welcome back to NYSE Live. Markets are officially open for trade. In the first moments of trading, markets are mixed. Earlier this month, blockchain-based firm Ondo Finance announced the launch of Ondo Global Markets, a platform for tokenized U.S. stocks and ETFs. And they say in just 1 week, it became the largest tokenized securities platform with $127 million in asset volume. Joining me now to tell us more is Ian DeBode. He is the Chief Strategy Officer at Ondo Finance. Ian, welcome to the show.
Thanks for having me. It's a pleasure.
All right, so Ondo Global Markets, can you break it down for us? And for someone who is new to the crypto space, what service is it providing?
Yes, so Ondo Global Markets is a platform that tokenizes stocks and ETFs on the Ethereum blockchain. So think of it almost as what stablecoins did for $1. You put a token on a blockchain so that it's available to everyone globally. We just did the same thing for 100 different stocks and ETFs. The benefit of doing something like that is that, similar to a stablecoin, once you tokenize a stock or an ETF, it can move around 24/7, it's globally accessible, and you can actually start to use it in DeFi.
And why do you think it got so big in just 1 week?
Yeah, I mean, we are very pleasantly surprised with the traction to date. We have a track record of tokenizing assets. We started doing that in tokenized treasuries. Now we've expanded to stocks and ETFs. And even in the tokenized treasury space, we've always been a leader in that category. So I think the Ondo brand right now kind of presents some trust to investors. The additional point to say is that the Ondo Global Markets platform is the first time that we've been able to tokenize stocks and ETFs in a way that anyone globally can access them permissionlessly, so move them around 24/7, send them to anyone you want, with the deep levels of liquidity and at the right price, just the same price that you can access it in a brokerage account. So both the fact that these assets are permissionless, meaning that you can freely move them around and that you can buy them at the right price with deep liquidity, I think is attracting some serious institutional investments.
And I love the way you're breaking things down and explaining them, because some of our viewers are new to the crypto space, and there's so many terms out there like blockchain, crypto, Bitcoin. Can you give us like a quick, just easy to understand explainer of how all of those things are connected?
Yes, so when you tokenize an asset, what it really just means is that you acquire the underlying, so if it's tokenized Tesla, you make sure that you can buy Tesla, put it in a brokerage account, and then mint a token on a blockchain that represents the economic exposure of that Tesla stock. That Tesla stock that's sitting in a brokerage account does not move. You want to make sure that it stays there so you always have it available in case someone wants to redeem. But that token that you issued on a blockchain can freely move around 24/7 and anyone who has a crypto wallet can essentially hold it. It's very similar to a stable coin where essentially you just put cash in a bank account, mint a token against that on a blockchain, and then it can freely move around. Anyone can hold it on a crypto exchange or in a crypto wallet. We essentially just did the same thing, but for stocks and ETFs where the underlying assets are sitting in a brokerage account.
And tokenized treasuries are already a $6.8 billion market. Are tokenized stocks and ETFs the next frontier?
We would like to believe it is. Typically, it's very hard to predict which assets actually get adoption, but when you think about the latent demand globally that is out there for these assets, I think it is pretty significant and a lot of people underestimate it. Right now, when you look at stable coins, we're already coming up on almost $300 billion, in large part because hundreds of millions of people globally have figured out that the stable coin is a very easy way to get access to the US dollar, and by putting it on blockchain rails, it actually becomes better than if it's just in a bank account because you can freely send it around 24/7. The same thing has started to happen with tokenized treasuries. It went from $1 billion or so 18 months ago to now $7 billion. And we expect the same thing to start to occur for stocks and ETFs. There are about 400 million people outside the US that have a crypto exchange account, but most likely do not have a brokerage account because access to brokerage accounts historically has been a lot more difficult to get. So we believe you'll start to see crypto exchanges and crypto wallets start to list stocks in tokenized form, really opening up access to that global audience that historically has not had that.
All right, and Bitcoin and Ether this year hit all-time highs. What are your thoughts on that?
I mean, it's a confluence of factors, really. It's the perfect storm. There was a lot of pent-up demand. I think we saw that when the ETFs launched, even under the previous admin. This particular administration has started to provide some more regulatory clarity, and were a lot of institutions that were really waiting for that to happen. So I think it's just pent-up demand from the past years that has accumulated and that now really start to reflect itself in market prices. I think at this point it's safe to say that crypto as an asset class is not going to go away. Even 4 years ago when I would speak to institutions, that was still the question, like, is this stuff going to stick around? People right now understand it's not going away, and as a result feel more and more comfortable allocating a certain percentage of their portfolio to the asset class.
Yeah, we've had some recent IPOs here, Circle, bullish, so crypto really is entering, the world stage.
Oh, for sure.
Yeah.
And I think you start to see, because most of these IPOs has done pretty well, right? I think there's a real retail demand for these assets. People want to get exposure to the category that isn't just Bitcoin and ETF, and these companies represent that.
All right, Ian DeVoe, Chief Strategy Officer at Ondo Finance. Thank you so much for joining us at the New York Stock Exchange.
Thank you for having me.
Coming up, the cybersecurity industry is honing in on the latest innovations as the industry aims to defend the next horizon. We'll have more on this story next.
Today, we officially begin our journey as NYSE.
Now you're part of our 2,400 companies listed on the New York Stock Exchange platform.
This milestone is thanks to all of you. We've established ourselves as a market leader.
And you stand at the forefront of building materials across North America.
Today, NYSE becomes the partner of choice for the professional builder of North America. As NYSE, we rise every day, and we are investing right here to help build that ambition.
How did this little company that was struggling 4 years ago get to this stage? In 2025, here we are today.
Congratulations, you priced above the range, you opened up 39%, you closed up 45%.
We're just getting started, and we look forward to proving ourselves to you over and over again. Today, we honor this new responsibility, and we are celebrating not this IPO, but the people that got us here. So we'll continue to innovate. We'll continue to push the boundaries. This is not the end. This is the beginning of a new chapter.
Welcome back to NYSE Live. In August, cybersecurity firm Night Dragon teamed up with the New York Stock Exchange to host Cyber Live from Texas, defending the next horizon. Our very own Kristen Scholler was on the ground in Austin, where she spoke with Night Dragon Chief Executive Dave DeWalt and the Capital Factory CEO Josh Baer about Texas's status as an innovation hub. Check it out.
Night Dragon is securing our world for tomorrow, and that includes through partnerships. Joining me now to talk more about it is Dave DeWalt, CEO and founder of Night Dragon, and Josh Baer, CEO of Capital Factory. Gentlemen, welcome.
Yeah, thanks for having us. It was awesome.
Glad to be here.
Josh, we'll start with you and let's talk about Texas. It is emerging as one of the fastest growing innovation hubs in the country. How do you see investment playing a role in accelerating that momentum?
The landscape has continued to change, but it was really accelerated by COVID. COVID accelerated so many different things, but it accelerated the growth here in Austin and in Texas. And along with that came a lot of venture capital growth. And we're seeing that driven by the talent, the people that are moving here to go build their next business.
National security and cybersecurity, we know, are increasingly intertwined with technology innovation. Dave, why is it so important to invest in those sectors right now?
I always say it's like a perfect storm that we're watching happen around the world. Yeah, everybody sees it. Geopolitical tensions and all this technology inertia we have with AI and quantum and things that are going on. It's really created a need to secure, not just our digital internet, but all the domains as well. So we have threats and risks in space. We have threats and risk in air and oceans and land. All of this is kind of fusing together cyber and national security into a real new threat environment for not just the United States, but for the whole world. So we see ourselves at Night Dragon investing and advising in this world of national security, and you said it best, securing our world for tomorrow. So Josh and I are locked in arm trying to serve that mission to make the world a better place.
Yeah. Quickly focusing a bit more on Texas, Josh, we've seen its unique ecosystem really thrive. What have you noticed about that in terms of how it compares to other tech hubs?
Most cities have some kind of unique thing about them that makes them special. There's very few cities that can be a generalist where almost any kind of startup can thrive. And Austin really is one of those few cities like San Francisco or New York or others. What's really different is one, the type of people that move here. The influx is here. It's not going the other direction. And so what you see is just super talented entrepreneurial people that could kind of have a lot of choices on where they could go. Even with how complicated everything is today, Texas is winning. People want to be here and the cities here are growing. And it's attracting the talent that you need to drive all these different sectors.
We know that Night Dragon and Capital Factory did recently announce a partnership. Dave, as you alluded to, what is this partnership about?
It's really about helping companies go from early stage and seed all the way through its maturity. When you look at other countries around the world and some of our adversaries, you can see a whole ecosystem of building companies, scaling companies, taking them public, getting capital. Here in the United States, we didn't have so much of that in the defense tech or cyber tech space. So by coming together and uniting ourselves, we want to be able to create innovation, nurture that innovation, help scale it with capital, create an environment that's pro-business, pro-defense, pro-national security, do it where the innovation hubs are at. And I agree with everything you said. Texas is amazing watching the growth here, how pro-business and how pro-security it is. So what a world we live in.
What excites you about this partnership, Josh?
We've been doing this for a long time, but we started really small. Really at the very beginning is making really small checks in early stage companies. And now we're able to start working with companies that are bigger. And those companies need a lot more money. We need partners like Night Dragon that bring both the capital and the expertise to help them really scale to that next level. Cybersecurity, the growth of the problems that we're facing, you see these really innovative, interesting things that Ukraine and Israel and others are doing. And we look and we say, wow, I can't believe they pulled that off. And then we look here and say, oh my gosh, what if they tried that here? And we are I think really susceptible to the drone attacks, to a lot of other things that we're seeing happen in other places that we need to get smart about quick.
I do want to talk about a company that I believe both of you have worked with, and that's Saronic. What has that work entailed?
So Saronic is a company who builds ASVs. These are autonomous surface vessels, boats, ships. And one of the things the United States has gotten kind of laxed at has been the production of military and ocean-based vessels. China's producing hundreds of these a year. Last year, we produced 8 of them. And the ability of Saronic to mass produce a new type of autonomy vessel into the thousands in the way we did it back in World War II is what America needs. So right here in Austin, they have warehouses, integrated manufacturing, an unbelievable environment to secure our waters and our maritime space.
I want to ask, when it comes to Texas, Josh, specifically for founders who want to build here in the national security space, what is your advice on finding the right investors and partners to grow?
I'd look for firms like Night Dragon, like 8VC that helped found Saronic, and others that aren't, maybe have a little bit more experience working with these companies, have seen them roll out, have contacts within the DoD or other places that can be helpful. Those are the first things I'd look for. And fortunately, again, there's a lot of that around here. There's a lot of people to find in Texas that are working on that.
Mm-hmm. What stands out to you specifically about companies and founders in Texas, Dave, and how they are shaping the future of cybersecurity and national security?
I've always had these like acronyms for things. Josh, I really love this. I called them the 3 T's, but I got 4 T's now. Okay, ready? So I always say team, tech, and TAM, and now I'm adding Texas to it. Okay, so team's really important. We know that. Like, you got to have the eye of the tiger. You got to persevere as an entrepreneur. You got to have experience to know how to build a company, how to get capital, how to create an idea, bring it to life. You got to understand how to create technology at scale and hardware and software with AI and with a lot of the advancements. And you got to go after a total addressable market that's big for investors like us to go after. But then you got to have an environment that is really conducive to build these companies. And that's where Texas has stood out. Watching this community and this environment here in Texas be able to produce companies at these scales is very impressive. So I now call it the 4 T's. So
I like it. We'll take it. One more T.
Yeah, one more T. Indeed. Gentlemen, thank you so much. It's great to speak to you here in Austin.
Yeah, thank you.
Thanks for having us.
I make them say, wow.
I love celebrating companies on their listing day. And no matter where you're coming from to where you're going to, it is always so inspirational for me to listen to every company's stories and their journey.
Today is not about us. It's about each of you and every one of you. Because you all come here for a reason, to empower each other, to enable each other, to creating values. We are the independent global media, and we want to be a responsible media that we provide quality content, relevant content, ethical content, truthfulness, into what we report and what we deliver. Thank you.
NYSE Live. We are in the middle of VIA's IPO celebration. So if you've lived in a major city in the past 10 years, like New York City, you might remember VIA's rideshare service. The company has since pivoted to providing technology to transform public transportation systems, but it turns out that was their plan all along. Joining me now to share more is VIA's CFO, Claire. I'm so sorry. Welcome, Clara. Welcome, Clara. Take me through VIA's brand journey.
Thank you, Ashley. We're so excited to be here today. It's been an incredible experience at the NYSE. VIA was founded to bring technology to public transportation, and today we're in over 600 cities in 30 countries, bringing our technology to help 8 billion people travel more efficiently through public transportation. We're very proud to be here, and thank you for having us.
What has VIA's financial and operational track record been throughout the years, Clara?
So at VIA, we have a track record of rapid and durable growth. The business has been growing over 30%, revenue growth historically. We sell to cities, transit agencies, governments, and those customers rely on us for their mission-critical infrastructure. Business is extremely sticky, and we're just 1% penetrated of a very large $500 billion market.
Why did VIA decide to go public?
You know, we manage very important and critical services for our customers, which are governments and cities, and we take that very seriously. In a world where there are a lot of questions, we are proud to go public and bring the scrutiny of the public markets to our business and to our customers.
How will your additional IPO, how will the capital from the IPO be allocated?
We will continue to invest in innovation and technology, continue to grow, and we have done acquisitions in the past, which we expect to continue to do in a very selective manner. And of course, public transportation is one of the last pen and paper industries, and with the proceeds, we hope to continue to bring cutting-edge technology to the space.
And VIA has more than 1,000 employees. What is your message to them today, Clara, on IPO day?
Reflecting on today, we are so proud and grateful for the team and their incredible work to get to this point. When you take a step back, VIA is one of the only tech companies bringing technology and cutting-edge innovation to a space that really need it, and to 8 billion people. And it's amazing to see an incredible group of investors come behind a company like VIA that does tech for good. And I'm just so proud of our team today. It's a mission-driven team of what we're achieving and accomplished together. It's really a true team effort.
Clara Fain, CFO of VIA, thank you so much. Sorry about that earlier. Thank you so much for joining us. We really appreciate it, and congratulations.
Thank you. Thanks, Ashley. Thanks, everyone.
All right, we are bringing in Gabby McCaig. Gabby is the Chief Corporate Communications Officer for VIA. Welcome and congratulations.
Thank you so much. It's such a pleasure to be here. It's an amazing day. We really appreciate it.
So in my intro, I talked about what seemed like a pivot, right, from these rideshare services to providing technology to transforming public transportation. Can you talk about the strategy behind that?
Yeah, so originally our vision was always, our co-founders had this theory that you could take, what traditionally has always been fixed route networks, right? Buses run at a certain time on a certain path, whether or not there's demand for that bus. And they had this vision that you could actually use technology, you could use algorithms and AI to develop a network that was entirely dynamic. So anyone could book a ride whenever they wanted it, and that you could algorithmically route them together into a shared vehicle. That's the original innovation of the company called microtransit, and that's the technology that we really believed would be a much smarter way to power transit systems outside of big cities where you just don't have the density to make a fixed route bus really work.
I know that you have 600 partners in 30 countries. How does partnering with them and investing in this transportation stimulate or impact economic development?
It's one of the biggest pain points that we hear from mayors, from city leaders all over, is that these cities throughout the country, they're flourishing. They have new economic development. There's new jobs that are opening, new locations that are being built. But getting workers to these facilities is a major pain point. And so when we're able to come in and we're able to create a truly responsive transit network that can adapt to where we're seeing new development, new industry, we can get workers to jobs. We can elevate economies. One of our cities, Wilson, North Carolina, for example, they did a study that showed average household income had increased by 19% after they put microtransit into their city, and folks could just connect to so much more opportunity. So it's really a path we see it to sort of stimulating the economy of these cities.
All right, and how is VIA leveraging AI?
So one of the things that I think really sets VIA apart is we have billions and billions of proprietary data points. We have information on where folks start their journeys, end their journeys, all anonymized, of course. And what we're able to do is really understand, where do people need to go? Where do they want to go? Where is activity happening in cities? We're able to leverage information about pain points in the transit system. Where did they not take a transit trip because it took too long or was inconvenient for them? And we're able to use this to build essentially what we sort of have joked is an LLM for cities, right? If you think about Anthropic or OpenAI, right, they're using language as their embedding space. We're really using the data of the city, the traffic speeds, the demand, all of this information to create essentially an LLM for cities that we can use to proactively suggest recommendations to our partners on how they can make their networks more efficient.
All right, Gabby McCaig, thank you so much for joining us at the New York Stock Exchange, and a huge congratulations. Again, huge congratulations to VIA on their IPO today. We will be here tomorrow with more finance news on the markets. We'll see you then.